The Turkish central bank is teaming up with researchers to study the potential benefits of a shift towards electronic money. This new payment will be a version of the Turkish lira that's only available digitally. That means there'll be no need to print banknotes or mint coins. As cryptocurrencies become more popular, the world's central banks have realised they need to provide an alternative. And Turkey joins a growing number of countries that are exploring digital currencies. Paolo Montecillo reports.
Turkey wants to be the new kid on the blockchain. Its central bank is expanding a project to study the use of digital currencies in the country. Replacing notes and coins with cloud-based cash is expected to make buying and selling easier, cheaper, and more secure. There are similar efforts underway in places like China, India, Indonesia, and the US.
This is something we're investing time and labor in right across the Federal Reserve System. You may know that the Federal Reserve Bank of Boston has a partnership with MIT looking at one particular thing.
The Turkish move involves partnerships with institutions like the Scientific and Technological Research Council of Turkey and the Informatics and Information Security Research Center. Experts there will help determine the technical details needed to roll out digital currencies and what the benefits would be for consumers. For governments and international institutions, there's tremendous pressure to get it right.
The regulators are wrestling with very important questions of trust, interoperability, the risks associated with shifting gear in that digital direction, like risks of cyber attacks or of money laundering, of crime being committed on digital platforms.
If these challenges can be overcome, experts say the benefits are easy to see. Economies won't have to rely on the logistics of moving cash around to keep commerce running. Transactions will also be easier to track, helping authorities find tax cheats and other criminals. Paolo Montecillo, TRT World.
Let's get more on this now with Turan Sert in Istanbul. He's a researcher and advisor at Blockchain IST. He's also a member of the advisory board at the cryptocurrency exchange Paribu. Great to have you back with us, Turan. We know cryptocurrencies have exploded in popularity around the world, including here in Istanbul, but this idea of a digital version of the lira would be quite a different prospect. What are the advantages of having a digital currency versus cryptocurrencies?
Well, first of all, thank you for inviting me. It's a pleasure to be with you. I think when you look at the digital currencies and cryptocurrencies, they are quite different in the sense that cryptocurrencies are basically decentralized form of money, meaning there is no central body that governs the rules and the issuance of the money. Whereas digital currency, as a general term, is actually authorized and controlled by a central authority. And in this case, what we're talking right now is central bank digital currencies, which means digital currencies that are controlled, issued and controlled by central banks. Now, I think what we can discuss is the advantages of central bank digital currencies versus the money that we have right now, and we can actually talk about that, and that makes sense. So the money that we use right now is actually mostly digital when you think of it. I mean, none of us actually carry hard currencies in our wallets anymore, but we rather use credit cards and use bank transfers. So that's all digital money. But the central bank digital money is different than this money that we use right now in the sense that it is programmable. So what do we mean by programmable? The programmable means you can put extra activities, extra attributes to that money. So how would that help? Just think of it like you can actually control how that money is used. So from a government perspective, it would be much easier to actually use that central bank digital currency to directly access your citizens and to incentivize certain people or certain regions or certain type of people. Like, for example, let's say there's a flood in somewhere and the people out there need some incentives to actually develop farming. So what you can do is you can actually program this money so that and distribute it to people directly, so those people actually can use it just for their own purposes. For example, just to buy fertilizers. So this way you can actually control it much better. You can actually understand the activities, how they use. You can track those activities. So that brings a lot of benefits to governments in terms of how they control the distribution of their money. In that sense, it's very powerful. It is. But it requires a lot of, obviously, research and development, and that's what Turkey is doing right now. They are right now looking at ways on how to make it the best way to ensure that it reaches its requirements that they have at the moment.
It'll be really interesting to see what the study comes up with when it's released next year. Turan Sert from Blockchain IST and Paribu, thank you so much again for joining us. And that is the latest business and finance news for now.